Hello there, and welcome to the DGI Crab, all of my dividend growth investors out there. My name is Colby, the DGI Crab, and I am going to start this new series that I'm going to plan on doing a video on probably once every 2 weeks. I'm calling it the Great ETF Race, where the plan is going to be to dollar cost average just $5 every single week into 8 of the most popular dividend paying ETFs. The inspiration for this idea actually came from Troy over at Dividend Obsession. Thanks to Troy, I'm going to provide a link in the video description below over to Troy's channel, where he's doing something very similar, where every 2 weeks he's investing $5 into 12 different single stocks that he's a big fan of. I'm more of a fan of dollar cost averaging into ETFs as opposed to single stocks. So I thought I want to try a similar strategy here with these ETFs. So shout out to Troy for the inspiration. And we're going to get in here and take a look at exactly what the plan's going to be here. But before we get started, I do have to say that the opinions expressed in this video are just one crab's opinion. I am not a licensed financial advisor. You should always do your own due diligence before investing any of your hard-earned money into the markets. The point of this channel is to help make investing into dividend growth stocks simple by providing a smaller subset of stocks based on your age that maybe you should focus in on, and strategies to help you reach financial freedom. But again, these ideas are just my own, and there will also be links in the description here below to each of the 4 tiers that cover the dividend growth stocks that this channel focuses on based on your age group. So let's get into this. Let's take a look at the ETFs that I have selected here and the methodology that we're going to use. So I'm going to use SoFi's platform. SoFi is sort of my side brokerage. It's not my main one. I invest primarily on Robinhood. But the SoFi platform I've had for a while. I am a fan of it, and they do make it pretty easy actually to just set up automatic investments for as little as $5 on a recurring basis. So I'm going to have this automated and set up so it just happens automatically, $5 every week into all 8 of these ETFs. I'm going to leave dividend reinvestment, or DRIP, just turned on across the board. We're going to reinvest all the dividends into the underlying fund when they're paid out. In my opinion, each fund is quality, and the goal is to see how well they do with just equal focus and investment over a long period of time. So the point of the series too is that anyone can invest in the market without a ton of knowledge. You could just dollar cost average into 1 ETF, 2 ETFs, 8 ETFs for that matter, and you could just let them run without having to worry about the individual performances of a single company within the portfolio. All right, so on to our ETF. So the first one that I've selected is VIG, the Vanguard Dividend Appreciation Fund. So this fund employs an indexing investment approach designed to track the performance of the NASDAQ US Dividend Achievers Select Index, which consists of common stocks of companies that have a record of increasing dividends over time. If we look at the top 10 holdings here, you can see we've got some real powerhouses: Microsoft, Apple, Broadcom, JP Morgan, Exxon, United Health, Visa, Procter & Gamble, MasterCard, and Johnson & Johnson. So with stocks in the top 10 like Microsoft, Visa, MasterCard, United Health, Broadcom, there's some really lower yielding but dividend compounders in here that will really increase that dividend income over time. This is actually my favorite ETF for investors in the 31 to 42-year-old age range. VYM, Vanguard High Dividend ETF. The fund employs an indexing investment approach designed to track the performance of the FTSE High Dividend Yield Index, which consists of common stocks of companies that pay dividends that are generally higher than average. So you can see the top 10 holdings here, a little bit of crossover between the two. You've got Broadcom as the top holding, JP Morgan, Exxon, Procter & Gamble, Johnson & Johnson. Those are all in there. We've also got Home Depot, Merck, Bank of America, Chevron. So this one isn't going to have the lower yielder, higher compounders like your Visas, your MasterCards. It's going to focus in more on stocks that pay a bit of a higher yield. Next is VBR, the Vanguard Small Cap Value ETF. This fund employs an indexing investment approach designed to track the performance of the CRSP US Small Cap Value Index, a broadly diversified index of value stocks of small US companies. So there's a lot of holdings in this one. The top 10 make up just a small percentage of the overall portfolio. But there are some good quality companies in here. You'll see Atmos Energy, which is one of the stocks in my tier 2 group of stocks to invest in. And another one that I like that didn't end up making the tiers ultimately is Bunge Limited. It's definitely a stock with a lot of history of growing the dividend. So good solid group of small cap stocks here. We'll see how they stack up against the big guys. Next up will be VYMI, my favorite international dividend stock, the Vanguard International High Dividend Yield ETF. And this fund invests by sampling the index, meaning that it holds a broadly diversified collection of securities that in the aggregate approximates the full index in terms of key characteristics. The index focuses on companies located in developed and emerging markets, excluding the United States, that are forecasted to have above average dividend yields. You can see our top 10 holdings here, some big time household names here like Toyota Motor, Shell. You've got Royal Bank of Canada, one of the great Canadian bank stocks, Novartis, Nestle, really good group of companies here that and this is a very well diversified fund. I've done a separate video just covering VYMI and why it's my favorite international ETF. So got to see how our non-US friends, neighbors can do against the United States stocks. Next up, we have SCHD, the Schwab US Dividend Equity ETF, the internet's favorite dividend-paying ETF. Now, to pursue its goal, this fund generally invests in stocks that are included in the Dow Jones US Dividend 100 Index. The Dow Jones US Dividend 100 Index is designed to measure the performance of high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers based on financial ratios. The 100 component index is a subset of the Dow Jones US Broad Market Index, excluding real estate investment trusts, master limited partnerships, preferred stocks, and convertibles. It is modified market capitalization weighted. So we've got no real estate in here, 100% qualified dividend income. It's been an amazing performer over the years. And you can see our top 10 stocks we have here. We've got Texas Instruments, Amgen, Lockheed Martin, Pfizer, Chevron, Coca-Cola, Pepsi, Verizon, Cisco, and BlackRock. The majority of those made my 60 stock 4 tiers list that we cover here on the channel. So you can definitely see why the internet loves this one so much. Can't wait to see how it performs against all of these Vanguard ETFs. Next up is DGRO, the iShares Core Dividend Growth ETF, similar to VIG. And looking at the charts, it's actually done a little bit better than VIG historically. I'm becoming a bigger and bigger fan of this ETF all the time, and I'm excited to make it part of the race here. This fund generally will invest at least 90% of its assets in the component securities of the underlying index. The underlying index is a subset of the Morningstar US Market Index SM, which is a diversified broad market index that represents approximately 97% of the market capitalization of publicly traded US stocks. Taking a look at the top 10 holdings, kind of similar to VIG. You've got Apple, Exxon, Chevron, Microsoft, JP Morgan, Johnson Johnson, AbbVie, Broadcom, Procter & Gamble, and Merck. Really good collection there of stocks for the top 10. Next up, we have DHS, the Wisdom Tree US High Dividend Fund. I don't see anybody talking about this fund. I don't get it. I'm a big fan of this particular ETF. It pays out monthly. It has the highest expense ratio out of all 8 of these that we're going to look at. It's a really consistent performer with a pretty good starting yield. Under normal circumstances, at least 95% of the fund's total assets, exclusive of collateral held from securities lending, will be invested in component securities of the index and investments that have economic characteristics that are substantially identical to the economic characteristics of such component securities. The index is fundamentally weighted index that is comprised of companies with high dividend yields selected from the Wisdom Tree U.S. Dividend Index. The fund is non-diversified. So our top 10 holdings here in this particular fund, again, we've got a nice group of stocks here. We got AbbVie, Exxon, Chevron, Altria. All four of those are in the 60 stocks that this channel focuses in on. The next 6 are not, but a lot of these were very close to making the cut, I must say, with IBM, Philip Morris, Morgan Stanley, Citigroup, Bristol Myers Squibb, and UPS. A lot of household names in there. It's a very, very solid fund, and it's the only one in this group that's going to pay us dividends monthly. So we'll see how big of a difference that makes in the long term. All right, and then finally we have SPYD, the SPDR or SPDR, as people a lot of the times call it, portfolio, S&P 500 high dividend ETF. This fund generally invests substantially all but at least 80% of its total assets in the securities of the comprising index, which is an index designed to measure the performance of 80 high dividend yielding companies within the S&P 500 index. The S&P 500 index focuses on the large capitalization of U.S. market, including common stock and real estate investment trusts or REITs. And the last time I checked, REITs actually are the sector that makes up the biggest chunk of this fund. It's about 25% of this particular fund is in REITs. So it's not totally qualified dividend income, great for immediate income seekers. Low expense ratio. If we take a look at the top 10 holdings here, we have, I only see one here, which is One Oak as a stock that's covered on this channel that made our top 60 list. But nothing against any of the companies here that I'm seeing right here. They just haven't been either growing their dividend consistently enough year over year, or maybe they don't have quite the amount of market capitalization in their sector as compared to some of the others that made the list over them. But I'm certainly not worried or upset about this top 10 here. Dominion Energy, Iron Mountain, Edison International, Williams Companies. This is just a nice looking list of top 10. And all we have to do to figure out exactly what's in it year to year is just look at the S&P 500 and figure out what the top 80 yielding stocks are. And it's equally weighted. So that's going to be the list. So it'll be interesting to see how the dividend reinvestment, which will be a lot stronger for this fund than most of the others, impacts our overall growth compared to the funds like VIG or DGRO that are likely going to appreciate in share price a lot more over the long haul. So this is going to be a really interesting race here. Very excited to see how it all plays out. Again, the inspiration for this video came from Troy over at Dividend Obsession. So if you are not aware of Troy and his channel, I put a link in the description below to his. Go and check out his video where he does a similar thing, again, with 12 individual U.S. stocks as opposed to ETFs. So just so you could see here, this is my SoFi platform. And at the end of the week, last week on Friday, I went ahead and started this out by making a $5 investment into each of these 8 funds. You can see I'm already up a little bit on all of them except for VYMI, which is just holding stable here right at $5. And I'm going to go ahead and invest another $5 into each of these funds this week. And then every 2 weeks, we'll check back in with this portfolio, see how things are coming along. So I hope that you will hit the subscribe button and that you will join me in monitoring this particular ETF race. And I'm very excited to see how it all plays out. This is going to be a long race, a very long journey. I plan to do this investment strategy with the SoFi app into the foreseeable future. So I hope you'll come along and join me on this. And just know that anyone can invest in the market with as little as $5 with pretty minimal knowledge about individual stocks. You can just pick a high quality ETF or 2 or 3 or even 8 and just consistently invest in them every week and let them run. Once again, my name is Colby, the DGI Crab. Email me your questions at dgicrab.com. Check the links in the video description below to other helpful videos on the channel, including the 4 tiers or 60 dividend stocks that we focus on. Until next time, everyone, keep on investing.